Hi there. Thanks for tuning in. Mortgage refi, or better known as refinance, is a popular topic these days. But have you wondered how this relates back to your VA home loan, or what the requirements are, or how you may benefit from this program? These are questions we hear on a regular basis. We're going to talk about this subject a little bit today, hopefully answer some of your questions on this edition of the VA Mortgage Minute, brought to you by Veterans Lending Group. Hi, I'm David Carter, National Director of Education for Veterans Lending Group and a U.S. Navy retiree.
Hey guys, my name's Lee. I'm one of the National Education for Veterans Lending Group, as well as a U.S. Navy submarine veteran myself.
Who U.S. submarines? Lee and I make up a small fraction of our education team here at Veterans Lending Group, and it's our job and certainly our joy and pleasure to get out and about and teach people about their VA home loan benefit and how it best works for them. As we mentioned a little bit in today's intro, we're going to talk today primarily about refi because we hear a lot about it these days, both in the news as well as the Q&A we get when we're out giving our presentations. So what I've asked Lee to kind of lead off with a little bit on today is kind of the top 3 tips or top 3 best practices for refi, especially in relation to the VA home loan. So Lee, I'm going to toss it over to you, brother.
Yeah, so there's a couple of options when it comes to refinancing a VA loan. A lot of people don't think I think they're just stuck with the current VA loan that they have and aren't able to get better terms or be able to leverage their house to kind of put themselves in a better financial situations. So one of the top few reasons why you would refinance is basically lowering your mortgage payment. And this is what a lot of people took advantage of last year, especially with rates. Even though it's still relatively low today, they were much lower last year due to a lot of economic reasons as well as COVID and all that great stuff. So I want to share my screen real quick for you guys, but I want to show you guys a comparison in regards to a client last year. They were trying to refinance a house that they owed about $360,000 on. Now, there's a lot of benefits inside of when you go from, so this client wanted to go from their current rate of, I think it was about 3.5 is what they were at because they had bought the house maybe a couple years ago. Now they want a new rate of 2.25. Now, there's a lot of great benefits, and you see here on the screen that the change in their payment was $232 based on this specific scenario. It's a big amount. That's over, that's $200. That's over like $3,000 a year, right? That's monthly savings. But there's more to it than that. So if you kind of notice that, in the 3.5 column, you can see those different colors. Each of those colors represent a portion of where the mortgage payment goes to. So if you look at it, the blue portion is what goes toward principal. You see that on the screen, it's about $672 that goes toward principal. That's what pays down your loan. This gray portion is what you pay toward interest. As you notice, this is the bank's charge to lend you that much money. If you notice, that's about almost a $300 difference in between the principal pay down and paying toward the interest. The purple stuff is all the taxes stuff that you have to pay for anyway, so that doesn't really matter as much. But if you go straight from 3.5 to 2.5, you notice that the blue is much larger as well as the gray is much smaller. So what that means is that not only does getting a 2.25% rate get you a better payment, you actually pay down your principal much faster. And in this case, your principal pay down is $760 on a 2.25 versus $672, right? So in that already, it's almost like a $90 increase. But another way to look at principal paydown, it's like a forced savings account. So you're adding more toward a savings account that's paying down your principal on your mortgage. Therefore, you'll have more equity a lot sooner. Also, you notice that your interest, what you pay toward interest, is almost $320 less. So if you kind of take the difference between the increase in mortgage, which is about $90, and then you have another $300 of interest saving, that's over $400 if you kind of think about it that way. So you pay more toward principal and you pay less toward interest. And so those two combined is what make up the difference in the payment of $232. But you're saving actually much more than that by paying your principal down even more by having a lower interest rate. So that's one of the great benefits of having doing a refinance that's low, that gets you a better interest rate, and that's its only job. Another option is debt consolidation. So if you want to restructure your debts, I have another scenario for you guys. A very similar situation, $350,000 house, but this client only has about $200,000 left on their house. but his house is worth 357. Well, this client wanted to see what it would look like to go from 3.75 when he first bought the house to go into 2.5, but also do a cash out refinance to pay off all his consumer debt. So what does that make sense? Does it make sense to just restructure the consumer debts into the loan? Well, we'll kind of explore that. So if we look at it, so his mortgage, this is, so if we look in this over here where it says principal and interest, taxes and insurance, right? Taxes and insurance, HOA stay the same, doesn't really matter. But if we took his current loan balance of $207 and added about $60,000 of consumer debt payoff with a rate of 2.5, his payment only goes up about, I would say, almost $40, right? Which isn't very much, because what's going to end up happening is that his entire monthly saving actually saves him about almost $1,200 per month. So you're just restructuring your debts as far as a mortgage. It's stretched out for 30 years with a lower interest rate. That's if you take out the net change, that's like $1,150 per month, right? That's a lot of money per year. That's over $12,000 per year that you're saving on both interest and consumer debt that doesn't really have any actual sellable value or depreciating assets. So what could you do with an extra $1,200 a month? You could probably go to Disney World almost every month if you wanted to, right? So those are other ways that you can kind of restructure your debts. And like we had mentioned before, by having a lower interest rate, you actually pay more toward principal. So he'll actually probably, if you wanted, this person could take some of the monthly savings and add it to their monthly payment, their new monthly payment, and then could probably get back on track within a few years. So those are a couple of options. Another great reason to refinance is either you want to invest in real estate, or you want to do some in terms of improving your property. So you can take money out, improve your property, get more value by the time you sell the house. Or we've had some people use refinance to put a down payment on the next house they buy. So a lot of great reasons to kind of go into why refinancing may make sense depending on your specific situation.
And we could spend a lot of time on this subject, and we get a lot of questions about it. Another one I just want to cover briefly, Lee, is the term you'll hear out there quite frequently is EARL, not EARL as in your uncle's name, or IRL. It's IRRRL, and that's an interest rate reduction refinance loan. Did I get that right, Lee?
Yep, nailed it.
I have to second it. So that's what that means, and that's what Lee was describing with that rate reduction. Also, if I can just really quickly cover, there are sometimes seasoning requirements, which means that you can only do a refinance every so often in a period. And if I remember correctly, Lee, it's at least 12 months. Did I get that right? Do you know?
So when you refinance, it generally has to be, so the hard requirement has to be 210 days from your first mortgage payment. So that's when you can pursue another refinance.
Right. Yeah, and then there has to be a benefit to the veteran as well. So that's all the stuff built into the program that helps protect the consumer. So that's a good, great program, and very worthwhile. If you want to know more, we have plenty of education programs here at Veterans Lending Group. One thing we've noticed as we do what we do, we find out a lot of myths and misperceptions and sometimes downright untruths about the VA home loan benefit, a benefit that you as a veteran or service member have earned. This is why we're here for you. We have education programs, both virtual in person and on demand. So check out our website, vahomeloanbootcamp.com, for all our educational products. And let me see if I'm missing anything, Lee. We got some classes coming.
Yeah, we have I know we have a realtor class coming up. I don't remember when the next Zoom boot camp is. Is that tomorrow?
We do a virtual boot camp every Tuesday night, every Tuesday evening. So you can check out our schedule of events also is at vahomeloanbootcamp.com. So check out the website, check out our calendar, sign up some online education. And, if you're in a very dense area with lots of military and or veterans, and, we can set up a class in your area, we'd love to do that as well. So I think we covered everything we want to cover today. We want to keep it short because we're cognizant of your time. Just one more foot stomper for the education. Make yourself smart, become your own best advocate, and go out and use your benefit. Okay. This has been your VA Mortgage Minute presented by Veterans Lending Group. On behalf of Lee and myself, thanks for tuning in. Have a great day.
Thanks, guys.